All right, so we're really focused on the shutdown here in the U.S., but in all fairness, we've seen outperformance from overseas markets in Asia, including Japan, Korea, and Taiwan over the last month. What's been going on with that? And, I mean, is there potential for the shutdown to leave more U.S. money and global money to go to those markets or other foreign markets?
Well, I think there is. I mean, look, there's been a number of reasons this year why global investors have been looking outside of the United States, and I think this is just another reason for that to continue.
All right. You gave us a number of stocks, kind of almost like an emerging markets like MAG 7, but it's actually 8 stocks you gave us. I want to focus on a couple of them. One of them is Mercado Libre. All these stocks are, by the way, listed here in the U.S. One of them is Mercado Libre. The other one's C, and a couple other names. They're actually moving lower if you look week to date. So why do you think that these names, and we're showing them right now, Make My Trip Limited, New Holdings as well, why do you think these stocks are moving lower? Why isn't more money going overseas as we see political turmoil here? Because when we saw trade unrest and things like that, we saw a quote-unquote Sell America trade and a lot of money go overseas. Why is it going differently this time around?
Well, I think so far there's been a lot of talk. I mean, there's no doubt that investors have increased their interest in international investing, emerging markets, developed countries outside of the U.S. But the flows this year really haven't been that much. I wouldn't be surprised if they follow and are significantly bigger in the rest of the year than they have been in the first half of the year.
All right. Your wheelhouse really is Chinese technology. Chinese tech stocks are doing very well, week to date, just in general over the last month as well. What's the big tailwind here? Why all of a sudden is China being seen as more investable when in previous years it was seen as uninvestable? And is this about AI or is there some other factor?
Well, I think it's a combination of things. I think, once you become uninvestable, sentiment is about as bad as you can get. So the Chinese internet companies in particular were very cheap. They're very profitable. They've been buying back stock with the cash they have. And I think it was really the DeepSeek launch in the first part of the year that focused investors back on the Chinese internet companies, and they saw how cheap they were, and they saw that they are legitimate AI competitors.
All right. Do you have a top pick when we're talking about Chinese internet stocks? We often talk about the K-Web, just kind of a basket of stocks. Is there one stock in particular that you think American investors are either overlooking or need to kind of view as a must-have in their portfolio, similar to the way we kind of look at NVIDIA nowadays and some of these other big MAG 7 names?
Sure. Well, obviously, Alibaba and Tencent are the two, so-called super apps of China. And I think, every investor that wants that exposure should own those companies. I think Baidu actually is the company that I've found most interesting recently. Largely because it seemed to me to be the cheapest. You've got the search engine leader. Search is obviously under threat by AI and the ChatGPT, et cetera. You've also got the second largest self-driving car business in Apollo Go with Baidu. So, and you look at a company that, at least in the summertime, when we last spoke, it had almost 80% of its market cap in cash. So Baidu's been the company I've favored the most this year, but I think all of them will continue to benefit.
Very quickly, you and I have talked about Baidu before and their self-driving unit, Apollo Go.
Yes.
You say it's not even priced into the stock, but there was one. Can you just give that other stat you've given me about the number of cities in China that have over 1 million people compared to the U.S.?
Sure. Well, there's 136 cities in China with over 1 million people, about 10 here in the U.S. And in China, for the most part, the cities have very good physical infrastructure. The roads are nice. And I think that really makes it easier for self-driving cars. And on top of that, the Chinese government, both at the national and local level, are really behind.
Do you mind if I bottom line it because we got to go? But it sounds like you're saying they just have more areas to practice, for lack of a better way to say it. They have more big cities so that they can train their tech in big city environments much more easily than we can here. Is that the thesis?
And over the next decade, not just test, but actually deliver.